Today, I just wanted to talk about the importance of investment strategy and how your own strategy and your own needs directly impacts what sort of asset you should buy. So the reason why I say this is because I run a Facebook group where we have off-market properties. We like the excess stock that we have, we put it up in this Facebook group, and a lot of people obviously they just get excited when they hear off-market. Even I get excited, I won't lie, because when I'm looking for properties for my clients, I want to find the properties with the least competition. So naturally it occurs that way. But maybe I have a more realistic understanding of off-market properties because I see them all the time, and I understand that some are good, some are bad, some are terrible. And of course, even a good investment property that we find off market will be a bad asset if it doesn't meet their goals, right? What I wanted to say was, when you get started with property investing, let's say you wanted to buy your first investment property, you have to be thinking about your long-term goal as a focus. And if you're not, and you just want to get an investment, then you may get a little bit of turbulence there. You may make some mistakes. Because again, it directly relates to your goals, directly relate to the type of asset you should acquire and the type of strategy you should employ. So as an example, there are two types of assets, two types of main assets: cash flow assets and capital growth assets. Capital growth assets are your fastest pathway to building wealth through property, the absolute fastest way. So for example, you might only buy a property and own it for 12 to 24 months. And if you buy in the right location, you can make $100,000 to $200,000. So it's really, really crazy what those capital growth assets can do if you buy at the right time using data, of course. Cash flow assets, the strategy there is not the capital growth, but paying down the loan. And sometimes people feel more comfortable with these sort of assets because they don't need to pay too much out of pocket to hold on to them. And by the time that 30 years is up, they can own that property, and then it pays them cash flow. Now, the only issue with the cash flow one is just it takes a lot longer, and you can't recycle the equity from your previous property to buy your next as fast. So you can't build a portfolio as quick as if you were doing a capital growth strategy, unless you had amazing, extremely high income. Then you could just keep throwing deposits into all these cash flow assets. Now, why you would choose either? So for example, let's say if you had a strong goal of 10 years from now, you want $100,000, $200,000 of cash flow from maybe a commercial asset later down the track. That was your end goal. So you hold this one property and then you basically retire off it, which you can do. Then I would recommend that you would get a capital growth asset, allow it to grow for a little bit, and then let's say it grew 100 grand over 12 months. Then you extract the equity out without using your own money to put a deposit into buying your next property, and so on and so forth. And let's say over the 10-year period, maybe you've acquired four or five properties if you can sustain that. Eventually you have a certain amount of capital. You may have $500,000 to $1 million worth of capital, and at that point you can either sell or hold on and extract the equity to buy the commercial asset that you wanted to in terms of your goals from the very beginning. So that's just an example of why it's really important to look at your end goal and map everything out to achieve it. Cash flow wise, if you were to go down cash flow assets, it would be very, very difficult for you to achieve that over a 10-year period, right? And then if you don't have a strategy and someone advertises something to you like it's a great investment, you might just, because it's an off market or for whatever other reason, you might just get a little bit excited and actually try to jump in and buy that property. But that might not be suitable for your end goal. So I know I was a bit all over the place with that one, but it is extremely important to start off with your strategy and your end goal. I want 10 properties in 10 years. I want this commercial asset in this, or I don't want to have to ever worry about cash flow and topping up my property. So hence you go down the cash flow route. And then you can potentially maybe add another layer to the cash flow route to build the equity by doing renovations. That could be another strategy there, which some people use. So look, I hope this makes it clear how important property investment strategy is. And if you're getting started, try and think about what you want to achieve through property over the long term and before you start your property search.